Welcome back to the deep dive. We've got quite a mix of sources today.
Yeah, looking through them, it's everything from viral chocolate to gold investing and even national economic strategy. Seems all over the place at first.
Right. But we're going to connect these dots, pull out the key insights, and, get you up to speed quickly. That's the mission.
And there is a connecting thread, I think. It's about unlocking value, really, from things that are maybe overlooked or just sitting there.
Okay, let's start with the sweetest one then, this whole Dubai chocolate thing that just, exploded online.
Ah, yes. So the sources point to one specific bar that really started it. If it kicks dessert chocolatiers, can't get nafe of it.
And it's that mix, right? Milk chocolate, pistachio cream, tahini, and that crunchy nafe pastry?
Exactly. And apparently the founder, Sarah Hamuda, just created it to satisfy her own pregnancy cravings back in 2022.
Wow. So how does that become a global phenomenon?
Well, the sources pinpoint this one TikTok video, Maria Vejera, December 2023. It just went massive, over 125 million views.
125 million. So why that bar, that video?
The material suggests a few things. One, the taste was genuinely different. Two, visually, that green filling oozing out, perfect for Instagram, TikTok.
Totally grammable.
Right. And third, they made it scarce. Really scarce at the start. Only maybe 500 bars a day.
Only 500?
Yeah, and just through Deliveroo in the UAE.
Yeah.
And that exclusivity really fueled the hype.
And the impact was huge. These sources mention pistachio shortages, stockouts, people apparently smuggling the bars.
It sounds wild, and loads of copycats popped up from big brands trying to ride the wave.
But here's a key point from the sources, a sort of branding lesson maybe?
That's that.
Well, the product went viral, but it often just got called Dubai chocolate. Generic.
So the original brand, FX Dessert Chocolatier, might have gotten a bit lost in the noise.
Exactly. Unlocking viral value is one thing, but keeping your brand attached is another challenge.
That's a really good point. Okay, so shifting gears now, from chocolate to gold, a much older store of value.
Right. So why should you, our listener, think about gold investment today? The material frames it as a, classic diversification tool.
Yeah, hedging against stock market swings, inflation, the usual suspects.
And the historical performance isn't bad. These sources cite average annual returns around 9.6% over 40 years.
And it often moves opposite to stocks in downturns. Think dot-com bubble, 2008, even COVID. That's often the appeal.
So if you're considering it, especially in India, what are the options? The sources lay them out.
You've got physical gold, like jewelry, coins, and there's digital gold.
Okay.
Gold ETFs, exchange-traded funds, gold mutual funds.
Oh.
And sovereign gold bonds, SGBs.
Lots of choices. And these sources compare them on, the important stuff, risks, costs.
Yeah, costs are key. Making charges on jewelry, GST, storage, or expense ratios for funds. And digital gold has that buy-sell spread, around 6%, the sources say.
Ouch, 6% can hurt. Then there's liquidity, how easy it is to sell, and, of course, taxes.
And the takeaway? Well, for long-term investors, say 5 years plus, the material really leans towards SGBs. That fixed interest, 2.5% a year. And critically, if you hold to maturity 8 years, the redemption is tax-free. Even after 5 years, it's tax-free.
Okay, that's compelling for long term. What about shorter term, under 3 years?
Then the sources suggest ETFs or mutual funds probably make more sense than physical or digital, mainly because of lower costs overall, especially avoiding that 6% spread on digital gold.
Makes sense. Okay, final pivot. From personal assets to national ones. Asset monetization. Sounds jargony. What is it?
Basically, it's the government looking at assets it already owns, land, infrastructure that aren't maybe being used fully, and finding ways to generate revenue from them, unlocking value, again.
But on a huge scale.
Exactly. The purpose, as outlined here, is to raise money from these existing assets to fund new infrastructure, boost the economy.
And India's National Asset Monetization Pipeline, the NMP, the target is big, 6 lakh crore between FY 2022 and 2025.
That's the aim. And the sources list the kinds of things they're looking at.
Like what?
Vacant railway land, maybe 1 lakh acres. Unused defense land, about 32,000 acres. Assets owned by public sector enterprises, CPSEs, salt pans, even existing roads, pipelines, renting them out, essentially.
It's a massive undertaking. Are there challenges mentioned?
Oh, definitely.
Yeah.
Setting up the systems to do it transparently is one. Then there can be sort of sentimental objections.
Yeah.
Sources draw a parallel with people not wanting to monetize inherited gold jewelry.
Interesting parallel.
And potential worries about tax scrutiny for those involved in the deals.
Got it. But tying it back to you,